In this video, I'm going to be continuing to backtest gold over the 2024 price action. For anybody new to the channel, I'm going to be walking you through the full trading plan and system that we're going to be testing beforehand as well, including the full trading plan document as well that I personally use. So let's not waste any more time. Let's head right over to the charts and let's get straight into the video. Alright guys, so as mentioned before we go through the backtesting session, let's just do a quick overview of the trading plan itself and this full trading plan document which I have created. If you guys have already seen this before and you're not new to the channel, then I will put the chapters at the bottom of the screen. You can go ahead and skip to the backtesting itself. But for anybody new to the channel, first of all, let's walk through this exact trading plan. And by the way, guys, this trading plan, you can find it to download completely for free in the description below as well. The thing that I personally do is I'll have this printed out in front of me every time I come to the charts so that I can have a reminder of exactly what I'm looking for and exactly all of the confluences that I need to see in order to enter a trade. But essentially what we're doing, first step of the trading plan is to identify overall market structure and direction on the daily and 4-hour charts. And we are only looking to take trades in line with this trend for the highest probability setups. Now, after we've done that, right, obviously the daily and 4-hour, they give us a more general directional bias and a more general view of where price is likely to head, but we want to drop down to the lower time frames such as the 1 hour to identify any of the more refined structure and any of the levels that we can't see on the daily and 4-hour because they're less refined, right? So on the 4-hour and 1 hour, we're also drawing on any of the refined structure and any of the previous mitigations, meaning that, so by a mitigation, I mean an area that price has previously reacted from. So for example, if you look at this image right here, you can see price created a lower low. It then comes back up, reacts from this supply, and that's where we get that push down from. I'm essentially just boxing this off, and that's what I'm referring to as a previous mitigation. It kind of just helps us to get an overall it helps us to more easily identify the trading range when we come to the next few steps and to see where price is likely heading going forward. Now, going over to step 2, this is where we're actually going to identify a point of interest from which we are going to either buy or sell depending on that overall trend direction which we identified in step 1, right? So for myself, I have a few different criteria that I need to see met in order for a point of interest to become valid. So essentially, what I'm looking for is an area of imbalanced supply for sells or an area of imbalanced demand in the case for buys in a bullish trend, and I need to see some liquidity resting below this area. So for example, this one right here, we can see that it was inside the current bearish leg between the high and the low. It was in a premium, and it was imbalanced, and I had some liquidity below it. So this is what I would refer to as a high probability point of interest that price is likely to react from. And as you can see in this particular case, we did get that nice reaction. Now, obviously, when price comes into these areas, we don't want to just randomly buy or sell in them. We want to see some sort of reaction and some sort of confirmation or indication that price wants to flip back bearish in this area and react from it. So what I'm simply waiting for in terms of confirmations, this is where the lower time frames come into play and when they come into the strategy. And what I'm looking for is essentially an M5 change of character. So I think this is best explained via a chart example. So if we bring up trading view, essentially what I'm looking out for is, let's imagine we have a higher time frame supply, right? I'm waiting for price in order to sell from this supply zone. On the M5 time frame, price is going to be coming up bullish, creating higher highs and higher lows. All I'm waiting for is for price to tap into this area, create a lower low, create some imbalance, and then I'm looking to short from that imbalance. And what we refer to as the change of character is when price breaks below this current higher low. And on my charts, I just label it as C just to make it a little clearer so that I don't have to write change of character every time I see this happen. In the case of a buy, is the same thing. Let's imagine we have an area of demand right here. Price is going to be pulling back on the M5 time frame. This is going to look like price creating lower lows and lower highs. Once price comes into that demand, I'm waiting for price to create a higher high with some imbalance, and then I'm looking to enter after a pullback into that imbalance and then I'm looking to take price higher from there. And that's really it. That's the third step of the trading plan. All we're essentially waiting for is for the M5 time frame to flip back in line with that higher time frame narrative. So if we're looking for sells in a downtrend, I'm waiting for the M5 time frame to flip back bearish in line with that downtrend, and then I'm looking to execute my trade on the imbalance. Right? One thing I always like to emphasize to the guys inside VIP as well is that it's best to not overthink these trades. If you see your entry criteria, it's best to just set a limit and enter them. After all, we are only playing a probabilities game, meaning that if you think the trade looks like a bad trade, that might be the one in the sample of, let's say, 10 trades that actually plays out and hits TP. Whereas the ones which look good and which look perfect, obviously looking good being a subjective metric, these may be the ones which actually hit stop loss. So that is to say, how the trades look according to your own subjective perspective of the charts. The ones that look good may be the ones that hit stop loss, and the ones that look bad may be the ones to win. So don't overthink it, just execute all of the trades which appear according to the strategy, if obviously all of the confluences are present. Now, step 4, this is when we come into a few of the more nuanced details, including the stop loss and TP. So for my stop loss, I'm essentially, every time I'm executing a trade, I'm thinking to myself, where can I put the stop loss such that this would invalidate the trade? More often than not, it's going to be just above the high or the low. For example, here we can have the stop loss just above the high, and notice how I've left a little bit of room. That's because, particularly on a pair like gold, what you will often see is that the high will get swept one more time before price goes in your intended direction. So I want to have a bit of a safer stop loss, particularly on a volatile pair like gold, just to account for that scenario and account for that possibility, rather than just having it, you know, right above the area of supply or just below the area of demand, which I see a lot of people making the mistake of doing, ultimately just getting stopped out for price to go in their intended direction. So that's just what my personal preference is. This is a very sort of good way to increase your win rate, rather than just having the stop loss directly above the supply, which, you know, a lot of people try to do. Now, this is also a game changer, and this is one of the things I've really tried to emphasize inside VIP, which is that for this strategy, I'm going to mechanically target a 1 to 3 risk to reward. Why the mechanical target? Well, if you have, for example, a discretionary target, you don't really know exactly where you're going to target on every single trade, right? You could target, you know, Asia high, you could target an imbalance to the left, you could target this liquidity level, that liquidity level. You know, there's just an infinite number of targets, and what this leads to is just a lot of confusion when it comes to actually exiting the trade. And for example, one thing I used to do in the past with this discretionary TP rule is, if, for example, price had come to my first TP, let's say it was a liquidity level, and then started to pull back from that level back to my entry, I would make the trade break even though I hadn't tested a break even rule, or I would do something stupid like execute the trade early. And what I realized over time is that this wasn't necessarily due to a fear of loss, but it was more so due to that uncertainty and not knowing exactly where to exit the trade. So having this mechanical risk to reward has really been a game changer for myself, and is something I would highly recommend, and I'm a big proponent of if you haven't tried it out before. The 1 to 3 as well, this isn't just plucked out of thin air, it's based on my data, and based on the data, 1 to 3 was the optimal risk to reward with this strategy. I tried 1 to 2, 1 to 4, 1 to 5, etc. 1 to 3 came out on top as the most profitable, not making break even and not taking any partials or anything like that. So it's kind of just like this very simple and mechanical set and forget approach. And again, making break even, I personally found, even though it does, you know, you would think it would make logical sense, I found that based on, you know, several years worth of data, it actually turned out less profitable if I did make the trades break even. So hence why I don't do that. And then lastly, we have the risk management plan over here, but the only thing we really need to focus on for the sake of the backtesting is that we are going to do 1% risk per trade. Risk stays the same no matter how you feel about the trades, and also no break even or partials. Like I mentioned before, 1 to 3 risk to reward, mechanical TP rule. And then just below, I have included a few more notes on some of the key processes that I implement, such as trade journaling and something called ASR as well. If you guys want to, I'm not going to touch on these in this video because that's not the point of this video. But if you guys want to read through this in your own time, so I will leave this training plan completely for free in the description below for you guys to download. So if you want to learn more about these processes and how to actually go about improving your trading once you've learned the strategy, then I'll drop that in the description below. But that is really it for the trading plan itself. Now, obviously, this is going to become a lot clearer when we go through the chart examples in the backtesting session. So that is what we're going to do next. So if we head over to the charts now, and we'll jump right into the backtesting and some trade examples. Alright guys, so thanks for joining me here over on the charts. So let's get straight into things. We'll start with a completely blank chart and just go from where we left off last time. So over here on the daily chart, if you guys remember, that was the first step of the training plan. So what we can see is overall price was in this bullish trend. We had, this was the main daily breaker structure. You can see all of this momentum coming in as well. We've had this big move up. And recently we've started to see price pull back. Now dropping over to the 4 hour, we can see that price has kind of pulled back. Very slow and corrective price action, as you guys can see. It's grabbed this previous low, which was the bottom of an area of demand, and now we've had this rally come back into play, and price is moving over to the upside. So what I'm thinking here is maybe if we can look for a retracement, we can continue looking for buys up towards this previous high at the very least. So at the moment, based on where price is, we've kind of just had this big momentum candle, right? So really the only valid area for me at the moment would be if price can retrace into this area, because this is the only area of demand that I'm currently seeing. So if we play price on, yeah, so it didn't really want to pull back there. That's fine, we can look for other opportunities now. But if we zoom out again, you can see now price has broken that main high. At the moment, again, the only area of demand that I'm seeing in this whole range is this one right here. And by the way, when I refer to the range, I mean between the low and the high of this current bullish trend. Again, dropping over to the 1 hour, you can see there's not really any valid points of interest here for me, apart from if price can pull back into this one down here. Okay, it looks like it might. Right, there we go. So price has now pushed down and mitigated into this area of demand. It's overall still bullish. We've had a sweep of some inducement into this area. Inducement, by the way, meaning price has come very close to tapping into it, creates some liquidity above it, then sweeps that liquidity. So going over to the M5 time frame, this is where we're looking for an entry. All I want to see now is an M5 change of character. So in this particular case, you know, at the moment, this would be the structure you would need to see price break all the way up here, because that is the current lower high. Unless price did something like this where it re-grabbed the low and then broke structure, that would also be fine. But yeah, at the moment, I would need to see it at least break this high. Okay, nope. So now it's created a new low. So we can now look at new structure. So in this case, I would want to see price break this lower high. That's the most recent lower high, and close above it. Right, there we go. So we got exactly that. That's what I was waiting for. So we've now had a close above the most recent lower high. That's our change of character, and the first indication that price wants to shift back bullish, right? So in terms of entries, we have, you know, based on the momentum here, maybe we wouldn't expect price to pull all the way back down to here. So what I'm gonna do is I'm just gonna enter on this demand right here. So I'm gonna set my limit there. Have stops. I wanna have it just below these lows, because price could definitely come back down there and take out those lows first. And then as for targets, like I said in the introduction, we're gonna do a mechanical once a free risk to reward, which aligns very nicely with these sort of previous highs up here. So let's see if we get tagged into this. Right, there we go. So we're tagged in now. Let's see if price does pull back further. I said it, yeah, so like I said, it doesn't look like price is pulling all the way back down to here. I think this is one of the main mistakes people make with this style of trading, is that once you have a change of character like this, a lot of the times price is not going to pull all the way back down to here into a discount, for example. So what you ideally want to do is kind of think about it logically and take into consideration the momentum that we've had as well. So in this case, you had this big rally. Is it likely price is pulling back all the way down here? Probably not. So I would rather just enter here, have a slightly bigger stop just below that area of demand, and then enter like that instead. So let's have a look. Maybe we could look for another entry if price comes down back into this area of demand. You can see as well, one thing I like here is the fact that we've seen price push up, hasn't yet grabbed any of these previous highs, so it's very unlikely going to reverse here before that, in my opinion. So let's see if it can come back down. Right, there we go. So it's come back down into this demand. A sweep of this demand would also be valid if price did that. So by a sweep, by the way, I mean if price came slightly lower, then starts to react, because obviously at that point, everybody trying to buy within this area of demand have been taken out. So you're very likely to see price push in the opposite direction from there. Yeah, so exactly like that. That's what I would have looked for. In this case, this was also the Asian low taken out in London session. So that's also pretty, another nice confluence to add. So if I wasn't in this initial trade, I would be entering this. So here we can see we've had a change of character just there. Price broke the most recent lower high. We've got some liquidity above an imbalanced demand. So if I was going to enter this, I would be looking for something like this. Obviously though, because we're already in this initial trade, I'm not going to set this one, because then we would be risking 2% instead of 1%. But let's just see how this would have gone. You could have also, if you weren't using the mechanical 1 to 3, you could have just targeted the high up here, which is very likely going to get hit if it does hit a 1 to 3. So yeah, that would have played out very nicely, as you guys can see. But obviously, because we were in that initial trade, I didn't want to enter another one, which is, you know, it's pretty much the same trade, right? You're entering at the same sort of level. So you've basically just doubled your risk, which is not something I would look to do. But yeah, we've now had another break of structure, as you guys can see. Very clear bullish order flow and structure forming. Sorry, not order flow, just very clear structure and trend forming from this area of demand in this overall bullish trend. So my thought process here is that this could be the higher low, which puts in a new high. So I'm kind of looking just to continue buying price back up towards these previous highs. So next buying opportunity, maybe we could see a pullback into the demand. We have this one down here. Some liquidity resting above it. Again though, when I see a pullback into this area, I need another confirmation. I don't want to just set a limit on it. So we've now had price pull back into this level, take out some of these previous lows, as you guys can see right there. So yeah, looking out for a change of character here. At the moment, need to see a break above this high. That's the current lower high. And a closure above as well. A wick above is not enough for me. Right, there we go. So we have had that, but this is the Asian session, so obviously I wouldn't be trading this. I'm going to fast forward it. I think I accidentally just clicked next day open. Yeah, so price obviously. Okay, so we've now had another rally. That was my bet. I clicked the next day open rather than the next session. We've had another break of structure right here. Now, this looks very nice. You can see as well to the left, price has just come into this imbalance, so it's very unlikely going to just randomly reverse from there. It has come back down and tapped into this area of demand and is currently reacting from it. We haven't had a change of character yet, but if price can close above this, this would be a valid entry. Okay, there we go. So price is closed above that level. We've got an area of imbalanced demand right here. I'm going to fast forward Asian session. Okay, so Asian sessions, it didn't hold the demand, but it did sweep it. So this is still valid. We have now had another break of structure as well. So yeah, realistically, I'm happy to enter here if price, you can see it's come back down and held this demand. We missed the first tap. Ideally, we would have just set a limit on this demand, but because prices has already pushed away, I'm just going to enter here. Stops below that low and go for a 1 to 3. So let's see how this goes. Obviously, market execution on this one. But yeah, there we go. Nice one. So like I said, ideally we would have been able to enter from a limit on the demand, but because price had already pushed away when London opened, I was happy just to do market execution instead. Price is pulling back again. Maybe we can see it come into this demand. Let's have a look. So at the moment, it has kind of retraced, swept all of these lows into the imbalance. Notice how it's created these sort of relative equal highs as well. That's kind of what we want to see. 5 minute has flipped bullish from here. We've got an area of, actually I'm not really liking this. Let's just see how it plays out here. Okay, so price is coming back down. We've got an area here of imbalance, this whole sort of region. So let's set a limit here, see how it goes. Obviously this is a valid trade, it's come down, grabbed the liquidity, flipped bullish on the M5 and left this area of imbalance. So all of the confluences are present, so let's just set the limit, try not to overthink, and we'll see how this goes. That was meant to be a limit order, not market execution. So let me close this one. And we will set a limit order instead. Right, there we go. So we're tagged into this now. Let's fast forward Asia. Very nice. Asia pushing up. We've broken structure. It's also now taken out the main high, which was this one to the left. Once that happens, you kind of want to be a bit careful, because obviously once the external high is taken out, price will very, very often come back down for some of these internal lows. But yeah, there we go. In this case, we did end up seeing price play out very nicely. So again, here, I'm just very simply looking for more continuations to continue the overall bullish trend back up towards this previous high, which is the current trend high. It might have also been the current all-time high at the time as well. Next point of interest, maybe if we can see a retracement into this demand. What are we seeing at the moment? I wouldn't really take a buy from here. There's nothing too clean, so I'm just going to play this on at the moment. Okay, cool. So price has pushed up. It's now broken the main structure, which was this one. So all of this becomes internal now. We can get rid of some of the markings like this. Overall though, price is still bullish. I'm still mainly looking for buys. If we can see a retracement, this area of demand is still looking pretty good. If we can see a retracement into there, because this is the all-time high, there's not really anything to look out for to the left. So obviously just kind of following this trend and not trying to anticipate a reversal or anything like that. Okay, so we've had another quite big jump up. Yeah, so obviously price probably isn't pulling back down to there now, so we can get rid of that area. Maybe we can see a retracement into this one. You've got Asia low just above it as well. Cool, so quite a slow corrective pullback, which is what we want to see ideally. If it doesn't respect this area, we also have an area of demand just below it. But yeah, for now, I'm going to monitor this one, see how price reacts to it, see if we get a confirmation. So as always, jumping over to the M5. Right, there we go. So we've got that change of character. After Asia low was swept into this demand, I'm going to enter on the imbalance just here. By the way, this is also one of the things that I tried to emphasize inside VIP, which is that You know, I see a lot of people with this style of trading, they try to get a sniper entry, for example, in this demand, but I would rather just have a slightly bigger stop and enter on the more general area as soon as the imbalance starts, rather than trying to get that overly refined entry and missing a lot of trades. So let's see how this, yeah, so that one was a loss anyway. There we go. Next idea, if we zoom back out, so it has come down and grabbed this sort of demand low. So overall still bullish as well, keeping in mind. Let's see, what does daily chart look like? Still overall bullish, I'm still liking this. So maybe we could see some buys from here. Let's have a look at the M5. Actually, yeah, so this is valid. You can see price swept the area of demand. We've had an M5 change of character. We have an area of imbalanced demand just here. We've got some liquidity resting above it if I just mark that on. So yeah, this is another valid entry. I'm going to set this and we're going to have stops below the low in case price also wants to retest this demand. If it did that, the trade is still valid, so it doesn't make sense to have stops just below this one. And as always, 1 to 3 mechanical TP. Let's have a look if this can give us an entry. Right, there we go. So price is tagged in. It also created some more liquidity above the level, so that is overall looking pretty good. I'm going to play this on higher time frame. So yeah, let's have a look. Nice one, there we go. So TP hit on that. Area of demand swept. This is one of the things that I really like as well, as a kind of extra confluence to increase the probability that a trade plays out, is when the higher time frame demand zone that you're looking at gets swept, or price goes slightly lower than it, rather than the demand actually holding itself. So notice how you get this initial push from it. Price comes down, takes out the demand. That's when you get the real move. And yeah, so now we've had another breaker structure right here. So this one, this would still be a valid demand zone if price came down into it, because you could say that this is like an inducement just above it. So I'm going to keep that one marked, but we also now have this sort of region as well, with Asia low resting above it. Okay, so it doesn't look like price wants to pull back. We also have this area. This is a valid demand. So maybe this one as well. That would be valid. Let's see. Nope, doesn't look like price wants to pull back. We've now had another breaker structure right here. I'm going to leave this one on because, again, it's still valid if price sweeps this as an inducement into it. We also have this sort of extreme as well as a valid demand zone. Okay, there we go. So price is pushed into this extreme. This is Asian session, so I'm going to fast forward slightly. Okay, so for an entry on this trade, we would need to see a break above this high. Then the confirmation becomes valid. Yeah, there we go. So that's perfect. We've had change of character here. By the way, I'm on the M15 just because the M15 and the M5 structure is exactly the same here. You can see this was the 5-minute lower high. This is also the M15 lower high. It's just, in this case, the M15 is a lot cleaner. We've got an area of imbalanced demand down here with some liquidity above it. So I'm going to set my limit here. And yeah, we'll see how this plays out. 1 to 3 target once again. Nice, there we go. That was perfect entry actually. Again, just very simple stuff, repeating the same criteria over and over again. Area of point of interest, change of character, imbalance demand, and then execute targeting a 1 to 3. We've now had another break of structure, so just simply looking to follow this up. Could see these equal lows taken maybe, if price does come back down. Just being aware of that. But yeah, let's see if it starts to retrace first. We also have this area of demand here. Okay, nope, so doesn't look like price wants to pull back into it. This whole region here is a demand as well that price has just reacted from. On the M5 it has given a change of character as well, and we have this whole sort of region here as the demand, some liquidity above it. I'm going to set a limit on this area, not overthink anything, and we will see how this plays out. See, it's not pulling back at the moment. Okay, no, so this obviously becomes invalid once the main high up here is broken. So we'll get rid of this limit now. If price can come back down into this area, it's still a valid point of interest, but we would need to see another confirmation inside of it. So we have this whole area of demand right here. Obviously still very bullish price action, so still looking for buys overall. Yeah, there we go. So price has come down into it. Sweep of this low would also be a valid scenario. But yeah, let's monitor here first. Currently, this is the structure, so we need to see this broken. Yep, there we go. So we have our change of character. We have an area of demand down here. This one, obviously seeing that as liquidity because there's no liquidity above it. So we'll set this trade. Stops slightly below the demand. Here I wouldn't have it all the way below the low because the stop is then going to be huge, and you know, if it breaks past this point, it's probably going to take the low anyway, so it doesn't really make any sense to have it that far down. So I'm just going to set it right here and we'll see if it pulls back. Right, there we go. So we're tagged into this. I'll play it on M15 so it's a bit quicker. Okay, so it's holding at the moment. Let's see how it develops. Nice, there we go. So demand held. We had that push on that area. Back at this point in time, it was very easy to trade because you just had, you know, this very clear bullish structure. Price would just create a new high, pull back into demand. You would get an entry, and then you would be able to execute on that. Just sort of like textbook conditions, really. That, you know, you kind of want to double down and hone in your focus in conditions like this, because you know there's a high chance that price respects your analysis, particularly when you have this very bullish structure, obviously catalyzed by some sort of fundamentals. I think at the time this was the Russia-Ukraine situation in around middle of 2024. Okay, so has come back down and reacted from this demand. I'm also aware that we have some equal lows below, so price may want to take those out. At the moment though, this is the current bullish leg. Price has retraced into an area of demand, so let's see how it reacts from here. We haven't had an entry just yet. Okay, so now we have had an entry. We've had this change of character. Because this was the market open gap though, I'm not going to set a limit on this one. It's just one thing I've kind of observed, that when you have a demand created with market open gap like this, it very rarely holds. So I'm going to leave that and see how it kind of develops from here. Actually, no, this is a perfect trade actually. I'm going to set my limit on here. We have some inducement resting above it now as well. So that's kind of what made me change my mind. So let's see if price can tap into this area, place the order, and yeah, let's see how this goes. Okay, so we're tagged in. Okay, nope, so small loss on that one. Went 2% in our favor, but eventually came back down and hit stop loss. Right, okay, so this is what I was mentioning earlier where, you know, sometimes you have this initial push from demand, price will come down, grab the demand low, and then present an entry like we have here. So you can see price wicked the demand, we've then had that move higher, price creates a higher high. And in this case as well, we do have an area of imbalanced demand. So this now becomes another valid entry. And again, I'm on the M15 here because the M15 and M5 structure is exactly the same, but the M15 is a bit clearer. So I'm going to set my limit here. We will go for a 1 to 3 risk to reward. And yeah, let's see how this plays out. Cool, I like how price is consolidating above that level as well. Asia low swept into this area as an extra confluence. If you wanted an M5 entry, you would have just got one as well. You can see here price gave you a change of character. In this particular case, there's not really any valid areas of demand to enter from though, so I wouldn't probably take this one. But because we already are in this initial trade, I'll just let this one play out. So it took this external high. I'm not really liking this because it looks now like this is probably going to be the liquidity that price takes out. If it does take that out, we maybe have this lower demand to look at. Yeah, there we go. So we just got stopped out of that one. I'm still bullish. We have had price take out all of these lows. So if price presents another confirmation here by breaking above this high, I would get back in. Again, M5 structure and M15 structure is the same here, hence why I'm on M15. Yeah, there we go. So we've got another change of character after the lows were swept. We've got an area of demand right here. So I'm going to enter this. Like this. So this is the area of demand, by the way. And again, just going for a 1 to 3 risk to reward. Let's see, can it keep pushing? Nice, there we go. So TP hit on that one from the demand. If we zoom back out, what can we see? We've got you know, it's quite messy. We've got this breaker structure, but there's not really anything clear here. All of this is kind of just built up liquidity. Maybe if we can see a regrab of this low into this lower demand, that would be valid, but until then, not really seeing too much. Right, there we go. So price has now grabbed that low back into the demand. Let's see if we can get an entry here, or whether price just wants to continue lower. Yeah, okay, so price is just continuing lower in this case. No entry there. Right. So my next idea now, if you look at the 4 hour, it's kind of in this range, but what if you pay attention to the liquidity, you can see, if we just get rid of some of this to make it a bit clearer, you can see, right, price has sold off, but it hasn't yet taken out any of these previous lows. So the likelihood here, in my opinion, is for it to head towards at least these previous lows. So what I'm looking for here is maybe we can get in on some sells down into them if price does start to pull back, ideally before sweeping that low. Okay, no, so it didn't pull back before sweeping the low. So let's have a look I'd be a bit more hesitant with the sells now, because price has taken out all of those lows and the overall trend is still bullish, right? So let's have a look what we have here. Yeah, so I wouldn't be looking to sell anymore. What we can see is that price has come into this daily demand zone and it has taken out, you know, all of these previous lows. So this is where we could maybe start to see price shift back to the upside. Lots of people are probably going to be viewing this as a change of character and trying to sell as well. So that gives us kind of like an extra confluence. In a situation like this, I would want to see at least the M15 flip bullish. Yeah, so exactly like that. That's what we just got. After Asia low taken as well, so that's another confluence. We've got this area of demand. If price can push back down into this, I'm going to set a buy limit here. Stops slightly below in case price wants to grab the demand low, and again just wants a free simple TP. Let's see if it can pull back for us. There we go, so we're tagged into this. Let me just fast forward this a little bit and see how price develops. Damn, so we just got stopped out by a pip there. Now price looks to be playing out in our favor. You can see the mistake we made. Price used our entry as an inducement into this area of demand. So that's slightly annoying. I probably should have seen that, but that's fine. We'll move on to the next opportunity. So we've had another breaker structure. Price has pushed down, reacted from this demand, and you can see it starting to push away from that level. In terms of entries, I would need to see a break above this high before we enter any trades, and close above. Right, there we go. We've got a close above, but there's no imbalanced demand to enter, so I'm gonna just play this on a little bit. Okay, this is Asian session again. Fast forward that. Yeah, there we go. So analysis played out, but there wasn't an entry in that case, which is fine. Sometimes that happens. Okay, so we've had another break right here. So yeah, just looking for more buying opportunities now. Actually, we do have, I've just noticed, we have price approaching this supply zone. When you have a situation like this, I would kind of just keep an open mind, because one thing you could say here is that, you know, price was trading at the all-time high, so at any point it could reverse and flip back bearish. In this case, we have had a 4-hour change of character right there. So you could just say that this was a pullback for lower prices and for price to create a lower low. You can also kind of see that, you know, this, if you look on the 4-hour, it looks very corrective, a bit like a pullback rather than, you know, a complete reversal. So I'm going to keep this area of supply marked, and we can see if price does start to react from it. Even if it doesn't cause a complete reversal as well, this is one thing I always emphasize. You don't have to be right. You don't have to capitalize on, you know, you don't have to be right in the sense that you could be wrong about this coming down all the way to the lows. It could just be a small push for eventual higher prices. But because we are using those lower time frames to enter, you know, this is more than sufficient to catch a 1 to 3, for example. In this case, we have seen a change of character. We have this area of imbalanced supply up here. In this particular case, this is the only one within this whole range, so that's why I'm entering on this one. So yeah, this is a valid trade. I'm going to set this. In this case, I'm going to have stops a bit above, just in case gold wants to re-grab that high. As I mentioned before, it does that quite frequently. So let me place this order, and we'll see how this trade goes. Right, there we go. So we're tagged in. Very nice reaction so far. And there we go. Nice one. So TP hit on that. Very nice trade. Pretty perfect entry as well. Taking advantage of sweep of this liquidity into the supply zone. And like I said, very corrective looking pullback. So you've got all of this sort of built up liquidity below all of these lows. But yeah, guys, this video is already getting quite long. So before we end it, let's just go and look at the analytics so far. So let me bring them up. It's this session right here. So far, very decent win rate, obviously with a just under 1 to 3 risk to reward. I'm not sure why this is, because we targeted a 1 to 3 on all of the trades. Maybe because of, maybe it takes into account the commissions and spreads and things like that. The max loss streak we had was 2 trades. And as you guys can see, the winners did last quite a decent amount of time, 14 hours on average. And yeah, you guys can pause it here and go through some of these stats in your own time if you want. I'm not going to walk through all of the numbers. But yeah, obviously very profitable so far. And what date did we get up to? We got up to end of April 2024. So we've got around half a year left to do. So I'll continue this off in the next session, guys. But thank you for watching. If you did enjoy this video, make sure to like and subscribe. And if you did miss the previous part, watch this one next. I go through, you know, another hour of backtesting on between around March and April of 2024. So if you did enjoy this one, make sure to check out that previous part. Thank you guys for watching, and I will see you in the next video.